Recognizes the gentleman from Florida, Mr. Posey, for 5 minutes.
Thank you, Mr. Chairman. I originally, and I do want to ask you about the Basel III pigs, but the questions by Ms. Bachmann, I think, deserve a little bit more response. As you will know, Dr. Paul's legislation to audit the Fed was the most co-sponsored bill in the 112th Congress, very bipartisan, passed by an overwhelmingly bipartisan vote, and it did not talk about interfering with the day-to-day management and decision-making of the Fed. It was post-decision-making audits. And seeing where all government and official agencies under our dominion are subject to audit, it just seems very strange that the audit would object to having the logic behind their decisions and the many other of the litany of items you're exempted from being audited for, deemed to be reasonable.
So I think if members of Congress can ask the GAO to come into the Federal Reserve shortly after a meeting where we've made a difficult decision and to perhaps review transcripts and look at the debate that took place around a particular decision. We release transcripts, we release minutes of our meetings, but to come in, review materials, and say, no, we don't agree with the decision that was made at the last meeting will stifle debate in meetings and bring to bear short-term political pressures in the decision-making in the Federal Open Market Committee. And I do believe that independence of the Federal Reserve in making monetary policy means that we need some scope for deliberation and exercising our best judgment and then explaining to Congress and the public what the logic of that was. And the purpose, as I've understood it, of my appearing at a hearing like this is to give members of Congress exactly that opportunity.
I understand that. I understand it. Some of us believe in the old adage, trust but verify. And that's what an audit would do. And so would it be reasonable to assume you would not object to an audit if it was post 30 days or 60 days? Is there a time limit when you would be totally unafraid to be audited in retrospect?
Well, an audit is different than second-guessing policy judgments that were made
I'm not talking about guessing policy. We do that as it is now. I mean, we don't agree with all decisions you make now. I think that's clear from at least one side of this aisle. But I would just like to think that at some point the Fed could be audited like all official federal agencies, much less one that is not a government agency but has the run of our entire economy.
Well, this is an exemption that has been granted the Federal Reserve that's central to our independence for decades by Congress. And
well,
I think
we've changed a lot of policies trying to make it more transparent and accountable. I like to think that government gets less corrupt every day, not more corrupt.
Well, I don't believe that the Federal Reserve is in any way corrupt, and I believe that the confidence of markets in the Federal Reserve and in our monetary policy making would not be enhanced by that type of audit.
By historically being able to audit things that every other agency is subject to review for, but you should not be reviewed. Let me get over to Basel III. Starting in 2015, Basel III's liquidity coverage ratio will require banks to hold enough high-quality liquid assets to cover net cash outflows for 30 days. The problem is that Basel III's definition of high-quality liquid assets includes the sovereign debt of vulnerable countries like Portugal, Ireland, Italy, Greece, and Spain. Don't you think that's a little bit like leading sheep to slaughter?
Well, we have designed a rule in the United States that would have stricter definitions. That's a minimum.
So you think that that's not the same as rating agencies with high-risk mortgages as AAAs, which triggered the 2008 crisis?
I mean, what we want is for our banking organizations, and we've proposed this in our rule, to hold assets that can be quickly converted into cash.